On February 13, 2025, the Indian stock market experienced a slight downturn, continuing its trend of losses from recent sessions. Market sentiment remained cautious as investors grappled with both domestic and global uncertainties. The benchmark indices S&P BSE Sensex and NSE Nifty 50 closed in the red, reflecting the overall subdued mood. The S&P BSE Sensex, comprising 30 of India's largest and most actively traded stocks, ended the day lower by approximately 0.3%. The NSE Nifty 50, another prominent index tracking the performance of 50 large-cap companies, mirrored the Sensex's trajectory, also closing down by around 0.25%. This slight decline can be attributed to a combination of factors, including profit booking by investors after recent market gains and lingering concerns about global economic growth prospects. Additionally, escalating trade tensions between major economies continue to weigh on investor sentiment, leading to a risk-averse approach. While the overall market sentiment was subdued, certain sectors displayed resilience and bucked the trend. The pharmaceutical and financial sectors emerged as bright spots, with notable gains registered by key players in these industries. Pharmaceutical giant Dr. Reddy's Laboratories witnessed a surge in its stock price, driven by positive news regarding its drug pipeline and strong earnings expectations. Similarly, leading private sector lender Kotak Mahindra Bank also saw its shares rise, buoyed by investor confidence in its robust financial performance and growth outlook. These positive performances within the pharmaceutical and financial sectors underscore their inherent strength and ability to weather market volatility. The pharmaceutical industry's focus on research and development, coupled with the growing demand for healthcare services, continues to drive its growth. Meanwhile, the financial sector benefits from India's expanding economy and increasing financial inclusion. The Indian rupee, much like the stock market, experienced volatility on February 13, 2025, as it reacted to a confluence of global factors. The currency opened weaker against the US dollar, mirroring the cautious sentiment prevailing in global markets. Throughout the trading day, the rupee fluctuated within a narrow range, influenced by movements in the dollar index and crude oil prices. Renewed concerns about US-China trade relations and their potential impact on global economic growth exerted pressure on emerging market currencies, including the rupee. The rupee's closing rate against the US dollar reflected these global uncertainties. The currency settled at around 82 rupees and 50 paise per US dollar, marking a slight depreciation from its previous close. Gold, traditionally considered a safe haven asset, surprisingly experienced a dip in its price on February 13, 2025, despite the prevailing global uncertainties. This unexpected movement can be attributed to a combination of factors, including profit booking by investors and a slight uptick in risk appetite. While global economic concerns and trade tensions typically bolster the appeal of safe haven assets like gold, other market dynamics were at play. The slight recovery in global equity markets prompted some investors to book profits from their gold holdings, leading to a dip in its price. Despite this temporary dip, gold remains a preferred investment option for many individuals seeking to hedge against economic uncertainty. Its historical role as a store of value during times of crisis continues to attract investors. As global uncertainties persist, gold is likely to witness renewed interest, potentially driving its price upwards in the near future.